Welcome to this latest update on our managed portfolios. It's been just over a month since my last update. In this time, both equities and bond markets have fallen further, particularly last week. But we have largely the same two key topics which are dominating the headlines and sentiment, and that's inflation and the conflict in Ukraine. So it's the continued rise in inflation and the impact on interest rates which has caused the recent market falls. So, for example, in the UK, we've had the Bank of England saying inflation could rise further to around 11% later this year. In the US, the Federal Reserve Central Bank increased rates by 0.75% last week. And just to give an example, in Europe, in Germany, the PPI, which is the input prices, not their headline inflation rate, rose 33% in the year to May, and that's the highest increase since the statistic was introduced in 1949. So we can see this as a very much this inflation problem is very much widespread. And the difficulty is that central banks are increasing interest rates, but this may only have a limited impact on bringing down inflation, as the main cause of this inflation is rising energy prices and supply disruption. And markets want greater visibility. When's inflation likely to peak? So really, until we get this, we can expect this greater volatility, which is what I highlighted in last month's update. Now, having said that, we should also remember that markets are forward-looking mechanisms. So there does come a point when much of the expected bad news gets priced into markets. So, as soon as there's greater visibility on inflation, then confidence can start to return and markets could recover quickly. So we're at, like a tricky sort of tipping point. On the one hand, we have this risk of worsening economic conditions because of rising prices. Yes, on the other hand, we have the potential for economic and market recovery. And on balance, we prefer to be fully invested, in anticipation of recovery, and in excellent funds which are able to navigate many of the challenges which I've just highlighted. And finally, I think it's worth repeating that our portfolios, they're well diversified, and we have good exposure to some of the markets and sectors that are actually benefiting from this economic uncertainty and inflation, such as the US dollar, and the oil sector. So we're continuing to find opportunities and positives despite the negative headlines which we're all reading. I hope this was a useful update. For now, that's all from me. Thank you.